The consolidation on Bitcoin right now is looking pretty decent. If we zoom in onto the 1 hour time frame, we actually fell out of this rising ascending channel that I was talking to you guys about. This is definitely what we were expecting. If you go back to my last video, I was actually very vocal about how I'm expecting this to fail and drop down. And the really good news that I have for you, ladies and gents, today is that after falling down, we didn't actually really drop down by very much at all. And we've only started to find support at 22.7, which is a really good level to be finding support, because if we zoom out and take a look at what this level actually meant for the chart back when we were trading above 18K, 19K before, this is actually the high that we set on September 13, which is very, very promising indeed. So today I want to cover with you if we're going to be dropping a little bit lower before continuing up, if we will even continue up, and so on and so forth. This is going to be another very, very good one that's also quite time sensitive, so just double check that you are subscribed and you've got the bell notification checked as well, because you do want to get these videos very close to when they're published and not too late, so that obviously they're relevant to you. Now, one of the things that we've been able to do here is, instead of forming a very kind of aggressive, how do I say, continuation pattern of sorts, we've just kind of started to trade in a bit of a sideways trading range now, which I think is totally fine. I'm okay with that. I think it's really okay. And actually, if we remove this and just kind of take a different chart to remove some of our existing biases, I think it's also fair to say that Bitcoin could be in a sort of kind of falling wedge pattern now, which is a much healthier pattern to be in. If we kind of zoom out a little bit, it actually looks pretty clear that that's what Bitcoin's in right now. I think it's it would be appropriate for me to draw these with just normal trend lines for now, looking something a little bit like this, right? More or less. I mean, it doesn't really matter how you draw it, but what I like about these patterns, guys, more than patterns like this right here, because you see what we had back here was that the market just kind of kept trending up a little bit, right? Something a little bit like this. So we had our big move up, and then we just kind of kept moving up, and then we had another big move up. These kind of things, like I said to you guys a lot, they happen for Bitcoin, but it's not what you'd usually see, especially in traditional finance. This is a much healthier pattern. And the reason it's a healthier pattern, in my opinion, is we've got that big trend up right here. But then if we're kind of moving down slowly, that's showing us that the bears are having a chance to offload their Bitcoins. Again, ultimately, and I say this all the time, what we want to see, by the way, I don't know why the colors are so weird today. I think just Dubai's having it's a bad day for weather out here. But one of the things that I talk about a lot with these things here is, at the end of the day, what we need to see is that any supply of Bitcoins that want to be sold off have a chance to be sold off, right? And so what, the only way the price can rise is up. The only way the price can rise up during kind of market environments like this is quite simply when, let's say there's 10,000 Bitcoins that want to be sold off in the market, probably much less than that, but let's say there are 10K Bitcoins that want to be sold off. We're seeing, for example, through these kind of ranges, 1,000 Bitcoins sold off right here, and then a couple bought, and then, another 1,000 sold off right here. And eventually when that supply kind of dwindles down to zero and there aren't really any more Bitcoins that want to be sold in the market, that's when we can kind of continue our trend up. So it does two things. It kind of corrects us in terms of time, because this is taking a little bit of time, but the main thing it's doing here is correcting us in terms of price. We could have a sharper pullback down and then a recovery back up, but we want to see these things happen slower. When we get the combination of slow corrections that also take the price down, so we're getting hit with time and with price, that's the ideal situation, because when we get these really kind of quick snappy moves, if we do, let's say if we do rally up and then we get a quick snappy move down and recover it back up, this almost makes it all a little bit more unsustainable, I would say. And so that's something which I think is worth keeping an eye out for. When we form these kind of patterns, it just kind of makes it a little bit more sustainable. So I like seeing what we're seeing here. And if we take a look at what our indicators that I like to look at are showing as well, we have got some nice support from the 1 hour Ichimoku cloud now, which is absolutely great. That is really, really good news. And on the 1 hour EMA ribbon, we have more or less got a little bit of support here. Nothing crazy going on here. And you guys know that I don't like to use the hourly EMA ribbon particularly much in these YouTube videos, but the 4 hour EMA ribbon is what I'm much more interested in. And if we switch the time frame over to that, we finally got a little bit of support here now as well. So if we do drop down to the bottom of this falling wedge pattern, falling channel, whatever you want to call it, we are probably going to be in a situation where we can capture some really nice support from these EMA ribbons, and that would be great because, again, you know, basically since this rally really started and since we basically got a spread on the EMA ribbon, I know there haven't been many instances, but you know, I'm sorry, this is the wrong time frame. I know there haven't been many instances where you know, we've been able to use the EMA ribbon, but we did, you know, fairly consistently find quite nice bits of support off this you know, indicator right here. So that is something that I'm going to be keeping an eye out for. And if we take a look at the Ichimoku cloud again, just on the 4-hour time frame, still support is really far away, which I think is quite clearly showing us that the market can still pull back quite steeply, and we would be okay. You know, the daily time frame is still looking, dare I say, somewhat unsustainable, to be honest, guys. You know, if we just kind of zoom out and take a look at what's happened here, I mean, we still haven't, you know, we've had a little bit of a pullback here, but not very much at all. You know, something a little bit more long term that, you know, kind of leads us into like 2-3 weeks of bleeding would make sense. I know it's not something that you want to see. Obviously, it's not something that I would particularly enjoy, but you know, what's healthy for the market and what's enjoyable are generally, they're going to be two different things. So I think that's something which is worth keeping in mind, because a lot of people do lose perspective of very important things like this. The dollar is continuing to slide down, and that kind of makes this a little bit surprising for me, because I would have thought that Bitcoin can hold higher levels if the dollar is sliding down. The dollar is now basically as low as it's been since, well, yeah, again, only like 5 days ago, but you know, the important thing is, you know, like last time the dollar came down to these levels, it just kind of very quickly spiked back up, but this time we're actually hanging around these levels, which to me is a huge sign that, you know, see, before we responded to this area with a lot of strength, this time we're not getting a quick move up, which, you know, potentially indicates that, yeah, I mean, that there is an absence of that strength, or there's less of that strength, which potentially means that we could be looking at a much steeper drop down. Again, this is all with the perspective that this is an incredibly important level on the dollar, you know, on the dollar index right here, and I do still think that it would be naive to say that we don't get any sort of bounce whatsoever, but as it stands right now, looking at the shorter term charts, it does still look like it's going to collapse lower. It's only the long term time frame that says that we should, you know, to me at least, that says that we should find a bounce. And you know what, guys, generally I am going to be placing the long term charts as a higher priority in my analysis than the short term charts, especially in instances like this. So it's one of those things where we're seeing different signs right now between the short-term and long-term chart, but I am leaning towards what the long-term chart is showing me, simply because this is a long-term support level, right? So we could even dip down a little bit lower and then still rise up, and that would make total sense. We could even dip down, to be honest, as low as like 98. You know, other people have drawn out different kind of support levels, but the point is that this whole kind of region here should act as a bounce zone for the dollar, as it's done in the past many times. I mean, this wouldn't be the first time that we see something like that. Take a look at this bounce right here again. I know these aren't huge numbers, but going up by 5%, I would say, is quite significant, and so well worth keeping in mind as a result. You know, it could be one of the reasons that Bitcoin hasn't actually pulled down as low as I said it would, is, you know, because the dollar has been showing a little bit of weakness. That would definitely make sense. You know, I'd still like to see Bitcoin dropping down to support levels like over here, but I think the issue is now that we've kind of formed a slow, you know, falling wedge, which is really good. If we do just kind of drop down, that almost turns this into, you know, one of your classic BART patterns, right? Where if I'm so bad at drawing stuff, but if I, you know, just draw the face, people who don't know what a BART pattern is are going to be like, what the fuck is this kid doing? But it's just one of those things that the market generally does, where we quickly move up, we, you know, more or less trade sideways, and then quickly move back down, and then again you form Bart Simpson's head. So anyway, moving on to something a little bit more serious. This is yeah, it's still a retracement level that I would like to see. I don't know if we're gonna get it, but you know, it would be very clean if we did. It would definitely be the ideal situation for the short term chart. That is, obviously, again, longer term, the picture is a lot more muddy. What I would like to do is take a look at a couple different Fibonacci retracements and just kind of gauge if we've dropped down enough for these. So we're staying on the kind of longer term time frames just for now. You can see really nice interaction with that 38233 level if I draw the Fibonacci from here, which I think is a pretty fair place to draw it from. And then, of course, from the very bottom of this trend as well, also, again, a very fair place to draw it from. And pretty much no matter how we draw the Fibonacci retracement, we haven't retraced down by enough at this point. and also keeping in mind with my other chart that I showed you a few minutes ago that where we're at is kind of fairly heavy resistance, and I'll get back to why in just a little bit. I did cover that right at the beginning. I also want to zoom in and take a look at how this fib looks over here, and if we zoom in this close, then actually we're in a really good position because we have now come down to that 382 retracement. So I don't necessarily think we're going to be lucky enough to get these 618 retracements. This is more or less where my support area lays on the other chart, but a 618 retracement would be pretty deep for a market like this. I certainly think that it should have happened given the kind of resistance area that we hit, but one of the other characteristics of this market is that we're just not finding support as low as we want to, which is one of the reasons that the market is actually rallying as hard as it is. So I think that this is important to keep in mind. Let's actually see what the long and short ratios look like as well, specifically for retail traders. Let me just refresh this page here to make sure that we are getting the most up-to-date information right here. And we are, kind of leveled out a little bit now. So actually we've got a little bit more longs for retail traders than shorts, and I think that does potentially indicate that we could be looking at just a touch more downside before potentially carrying on. Previously what we saw was that there were way more shorts, and the ratio was like 0.83. Right now it's 1. Previously we were seeing way more shorts than longs, which I think also, kind of displays that sentiment is evening out a little bit. Let's see what the fear and greed index is showing us as well. Reading of 50. I mean, it's okay. It's really not that bad at all. With a reading of 50, it is dropping down. It's certainly not going up, which I think is a very, very good sign. So again, I think that just kind of generally shows again that sentiment is kind of evening out a little bit. So this is something that I'm going to continue to watch. Right now, I'm not necessarily seeing a trade setup here. I actually think this is a really dangerous zone to be looking at the market. We are going to see the S&P 500 open up within the next 4 hours, so probably around about the time that you're watching this video, and I'll be back later on tonight, I don't know, in about 8 to 10 hours from now with another update video for you, actually going through some really, really big price analysis. I've got a crazy target that I want to share with you in this next video that I'm going to be uploading to this YouTube channel, so just make sure that you are subscribed so that you don't miss it. That is a very, very important video indeed. I want to remind you guys that Bybit is offering a huge bonus of up to $30,000 when you sign up using my link in the description down below, and then head on over to the rewards hub up here, just like this. Just hover over this to the rewards hub. You can also do this on your smartphone after signing up using my link, and they are going to be offering you up to $30,000 in deposit bonuses, which you can use to trade with in these markets. So anything that you do with that money, is yours basically. I mean, if you make money, you can keep it. You can withdraw that money. If you lose it, it was free money anyway, so it doesn't really matter if you lose that money. So I think that's a really, really cool offer to keep in mind. If you have enjoyed this video, you know exactly what to do. If you want to get yourself inside of 𝗬𝗢𝗡's VIP and see how I'm going to be navigating these markets, then again, the steps to join are all on screen right here, including just kind of putting you in a chat with me. So if you just want to talk in general, that's totally okay as well. I really hope you have enjoyed this one. You know what to do. If you have, hit up the likes, subscribe, click the bell, and I'll see you all in the next one. Cheers.